Welcome to Debt-Free Dreams. Are you a crypto investor in Canada and unsure how to handle your taxes? Whether you're trading, staking, or holding, knowing how crypto taxes work in Canada is essential to stay compliant and avoid penalties. In this video, I'll break down everything you need to know about Canada crypto taxes in 2020 from capital gains tax to income tax, filing requirements, and tips to legally reduce your tax bill. Before we get started, don't forget to like this video, subscribe to the channel, and hit the notification bell so you stay up to date with the latest crypto tips and guides. Let's dive in. Chapter 1. Overview of crypto tax laws in Canada. Let's start with the basics. In Canada, cryptocurrency is classified as a commodity by the Canada Revenue Agency. This means crypto transactions are taxable, but the way they're taxed depends on the nature of your activity. 1. Capital gains tax. This applies if you're holding and selling crypto as an investment. 2. Income tax. This applies if you're earning crypto through activities like mining, staking, or receiving it as payment. Remember, the Canada Revenue Agency has been increasing its focus on crypto compliance, so keeping accurate records of your transactions is more important than ever. Chapter 2. Capital gains tax for crypto. Now, let's talk about capital gains tax, which applies to crypto held as an investment. First, what counts as a taxable event? 1. Selling crypto for Canadian dollars. 2. Trading one cryptocurrency for another. For example, swapping Bitcoin for Ethereum. 3. Using crypto to purchase goods or services. How to calculate capital gains. You're taxed on 50% of your net capital gains. Here's how to calculate it. First, calculate the gain. This is proceeds minus adjusted cost base. Proceeds is the value of the crypto when sold or traded. ACB is the original purchase price, including any transaction fees. The taxable portion is 50% of the net gain, which is then added to your total income for the year. Here is an example. You bought Bitcoin for 10,000 Canadian American dollars and sold it for 15,000 Canadian American dollars. Your gain is 5,000 Canadian American dollars. The taxable portion is 50% of 5,000 Canadian American dollars minus 2,500 Canadian American dollars. You'll pay tax on 2,500 Canadian American dollars at your marginal tax rate. Pro tip: use tools like CoinTracking or Coinly to automatically calculate your gains and losses. Chapter 3. Income tax for crypto. Next, let's look at situations where income tax applies. When does income tax apply? 1. Staking rewards. Crypto earned through staking is considered taxable income. 2. Mining income. Earnings from mining are also taxed as income. 3. Airdrops. If you receive airdrop tokens in exchange for work or as part of an activity, they're taxable. 4. Crypto as payment. Receiving crypto as payment for goods or services is treated like regular income. How is income tax calculated? Income from crypto is added to your total income and taxed based on Canada's federal and provincial tax brackets. For 2024, here are the federal rates. 15% on income up to $53,359, 20.5% on income between $53,359 and $106,717 Canadian American dollars. Higher rates apply for higher incomes. Remember, keep track of the fair market value of the crypto you earn on the day you receive it. This value, in Canadian American dollars, determines how much income you'll need to report. Chapter 4. Reporting crypto to the Canada Revenue Agency. So, how do you report your crypto activity to the Canada Revenue Agency? Step 1. Gather your records. Keep detailed records of every crypto transaction, including 1. Dates of purchase and sale. 2. Amounts in Canadian American dollars. 3. Wallet addresses or exchange platforms used. 4. Transaction fees. Step 2. Use tax software or an accountant. Using software like TurboTax, Coinly, or consulting with a tax professional familiar with crypto can make filing much easier. Step 3. File your taxes. Report capital gains under Schedule 3 of your tax return. Report income from staking, mining, or airdrops under the income section. Filing deadline. For most taxpayers, the deadline to file is April 30th, 2025. If you're self-employed, you have until June 15, 2025. But any taxes owed must be paid by April 30th. Chapter 5. Legal ways to reduce your crypto tax bill. Now, let's talk about 4 ways to reduce your crypto taxes legally. 1. Offset capital losses. If you sold crypto at a loss, you can offset these losses against your gains to reduce your taxable amount. 2. Hold crypto long-term. Avoid frequent trades to limit the number of taxable events. 3. Track transaction fees. Transaction fees can be included in your adjusted cost base, which lowers your taxable gains. 4. Use tax-advantaged accounts indirectly. While you can't hold crypto in ATFSA or RSB directly, you can invest in crypto ETFs or blockchain-related stocks through these accounts for tax-free or tax-deferred growth. Pro tip: always consult with a tax professional to ensure you're taking full advantage of available deductions. Chapter 6: Common mistakes to avoid. Finally, here are 4 common mistakes crypto investors make with taxes in Canada. 1. Not reporting crypto transactions. The CRA can track crypto through exchanges, so failing to report can lead to audits and penalties. 2. Mixing personal and business crypto. If you're mining or trading as a business, the tax rules differ. Be sure to separate personal and business activities. 3. Ignoring foreign exchange rates. All crypto transactions must be reported in CAD, using the fair market value at the time of the transaction. 4. Poor record keeping. Without accurate records, calculating your taxes can become a nightmare. Use tools or apps to stay organized. And that's your complete guide to crypto taxes in Canada for 2024. I hope this video helps you feel confident about reporting your crypto activity to the Canada Revenue Agency. If you found this video helpful, please give it a thumbs up, subscribe to the channel, and hit the notification bell for more crypto guides like this. Question of the day: how are you managing your crypto taxes this year? Share your tips and challenges in the comments below. Thanks for watching.